Though the Nigerian economy has witnessed an incremental deceleration in the inflation pressure that we are having over the last couple of months, however, high inflationary pressures remain a major concern to stakeholders and the average businessman or woman in the country. According to the National Bureau of Statistics, headline inflation reduced by about 0.38% in the month of September from 17.01% in August to 16.63%, while food inflation, which is the biggest worry for the poor, decelerated by 0.73% from 20.3% in the month of August to 19.5% in September. Now, with a steady but marginal reduction in the headline inflation over the past few months, economists are of the view that inflationary pressures, which have remained a key concern in the Nigerian economy for businesses and citizens, needs to be tamed much faster in order for the country's economy to sustain any growth trajectory. Joining me now virtually to discuss this and more on the show now, I would have the Chief Executive Officer of the Center for the Promotion of Private Enterprises and also the former Director General of the Lagos Chamber of Commerce and Industry, Dr. Muda Yusuf. Good afternoon and many thanks for joining us on the show today.
Good afternoon. It's my pleasure to be with you.
Most definitely. Dr. Muda Yusuf, you have a very clear understanding of what's playing out in the market today. But feeling the pulse, the sentiment we have in the market versus this reduction in inflationary pressure, you take a different narrative. Please explain to us in clear man's terms now why this is an issue. Irrespective of the reduction in inflationary pressure, the need to attend to the pulse of the people. The cries are loud, the market sentiment. How do we make a whole sense of both tallies we have as at now?
Thank you very much. Economic management is about the welfare of the people. It's about the prosperity of businesses. It's about investment. It's about job creation. Inflation is a major factor in all of these very important outcomes of quality economic management. If you go around the streets today, one of the biggest complaints among the citizens, especially the poor, is about high prices of goods and services. If you talk to even investors, whether they are small, medium, or large, their biggest worry is about high prices, which is inflation. We must acknowledge, given your background reports, that we have seen some marginal deceleration of headline inflation over the last couple of months. But this deceleration are what they are. They have been very marginal. So high inflation remains a major concern in the economy. Headline inflation has decelerated to 16.63% from 17% in August. Marginal increase of less than 1%. And food inflation had remained very high at over 19%. Core inflation also accelerated. So when you talk about poverty, food is a major driver of poverty. When citizens cannot afford easily the basic food items, particularly staple food. And for those who are in businesses, high inflation also erodes their profits. It increases their cost of operation. So that is why inflation remains a big problem, despite of the fact that we have seen a marginal deceleration. Because as prices increase, purchasing power weakens. And when I say purchasing power, I mean what people can buy with their income. And it is not many people that have had the privilege of an increase in their nominal incomes. over the last couple of years, some people's salaries have not been increased. Some people have lost their jobs. So when you have that kind of scenario, and you have this instance of galloping inflation, then it calls for a very serious and urgent response from the authorities. So that is why we say that inflation, though it has been decelerating, from both the business perspective and the citizens' perspective, I'm talking of the welfare perspective now, we still have a long way to go as far as the inflationary situation is concerned.
Dr. Yusuf, now I'd like to take you on the next forecast, looking at the 2022 appropriation bill. We see the proposal presenting at least about 13% inflation rate. This is still at double digits. How worrying is this for you, especially as the fact that we look at our GDP growth rate, slower than unemployment, slower than inflation, slower than all other index, which largely determine any sort of growth trajectory. Are you worried that despite a slowdown, this double digits are quite worried?
Of course, the forecast itself is also disturbing. Even though if we're able to achieve that, we can regard that as some progress. But even talking about 13% inflation rate is still on the high side. And even more disturbing is that even with the deceleration in the numbers, inflation headline inflation numbers, on month basis, prices have been increasing for most of the months. I'm talking of the past 6 or 7 months. Month-on-month inflation has been increasing. So that is the situation. And unless we begin to address the key drivers of inflation, there is very little progress that you can make. And when I'm talking of key drivers, I'm talking about things like the exchange rate depreciation. The exchange rate factor is a major factor in the galloping inflation that we are witnessing because of the import content of many of the production items that we see. No matter how little the import content is, if you relate the current depreciation to where we were maybe a year or two ago, it's a big gap. Even though we are seeing there's some stability in what we call the NAFEX window, which is the official forex window, the operating exchange rate is the parallel market rate, which has been well over 500. We are talking about 560, 570. There was even a time it went over 570 naira to the dollar. So this has a significant impact on inflation. It's a macroeconomic issue. It's a policy issue, although it's also a structural issue. But it's something that we need to address and address urgently. Then we have, even related to that, the challenge of liquidity in the foreign exchange market. And when I talk about liquidity, I'm talking about access with which you can even get the foreign exchange. If the CBN says that, okay, official window, the rate is 412 or 413 or 415, can you get it at the NAFEX window? So we have more demand than supply at that window. So there's a major liquidity problem which we also need to address. Then of course there's the dimension of security. Security situation is a major factor in food inflation. Because many of those who normally should be in their farms, many of them are now in IDP camps or just staying back at home because they are afraid to go to the farms because of the security situation. So addressing the security challenge is also a major issue because insecurity in the farming communities has also led to a sharp decline in agricultural outputs. Then we have the issue of cost of transportation. Now, these agricultural products are grown essentially in the rural areas, some of them very far away from the cities where the huge demands are. Moving these things from these locations to the cities is very expensive. And in the process of moving some of these things, some of them also go bad. So the prices, to recoup whatever they have invested, they have to charge those prices on the limited products that manage to get to the market. So cost of transportation is a major factor as well. Then we have issue of energy cost. Diesel now is well over close to 300 naira per liter. In some instances, it's even higher than that. So by the time you factor all of this into your production, if you are a manufacturer, or even if you are a transporter, because many of these trucks that you see around, they are running on diesel. Somebody has to pay for that. And it is the final consumer that pays for that. So energy cost is also a major factor in this. Then there is the factor of CBN financing of deficits. That is the monetization factor. Because in all of this, there's also a monetary dimension to it. The rate at which the central bank is also borrowing from the CBN is creating a lot of liquidity problem. I'm talking of naira liquidity now, which has a way of increasing money supply and also impacting on prices. So it is important to also worry about the extent to which the CBN is financing the deficit. Because it's what we call high-powered money.
Dr. Yusuf,
so these are some of the issues that actually driving this situation, and if we must fix the problem, these are the areas we should be looking at.
Dr. Yusuf, I like the fact that you made mention of energy costs. Now, one of the reports we had made the headlines yesterday was the fact that by the end of the month of June 2022, we're going to see an end to fuel subsidy. That means we're expecting a spike really in the cost of fuel, because at this point in time, subsidy is just what is barely keeping it at 165 thereabout at a margin. Ordinarily, the landing cost is well over 250 naira as we speak today. So hence, Nigerians are paying more for cooking gas. Then we have the challenge of what would experience come next year, fuel subsidy. If we don't have cushions put in place, it means that this likely forecast of 13% inflation rate would just be a mirage, because once we have fuel price go up, it means the cost of living will go up, cost of transportation will go up, cost of food is also going to go up, and a whole lot more. What sort of move do you expect now from the federal government and state governments to ensure we now aggressively chase cushions to reduce the impact of this subsidy removal on the average Nigerian?
Well, the issue of subsidy is related to the importation of petroleum products. I would like us to be positive that by middle of next year, we will have improved on our local refining capacity of petroleum products. We are having these challenges with price of fuel and subsidy largely because we are dependent almost entirely on importation for our petroleum products, local usage of petroleum products. So if by middle of next year, God willing, we are able to get the Dangote refinery, hopefully to have come on stream, if we are able to generate a lot more domestic production of petroleum products, then the pressure of subsidy, the pressure of cost that we fear may not necessarily materialize, hopefully. Secondly, even though the government has said by June or July next year, subsidy will be removed, let's wait and see. Because I know that the government is also very sensitive about this issue of subsidy, particularly coming from the angle of political consideration. Because the more we move close to 2023, the more it will be difficult for government to take some of these fundamental decisions. Because they'll be worrying about the political cost of taking such a fundamental decision. We have seen some such promises in the past. We have been promised that, okay, a subsidy is not in the budget, this and that. And by the time we knew what was happening, we had the theory of recovery. of the theory of recovery by NMPC. So all of these things, I think we just have to wait and see. But what is more important is for us to move very quickly to address the issue of improving the local refining capacity, because that in itself is a major problem. Thirdly, this is also a function of the global oil price. It depends on where the global oil price is at that time. If you have a reduction in global oil price, then we are likely to see a lot more reduction in what we can call now the landing cost. Because as an oil producing country, we should be reaping a lot more benefits from high oil prices. But unfortunately, the higher the oil price, the more we also spend in the importation of petroleum products, which is really unfortunate, just because our local refining capacity has practically collapsed. Then we need to accelerate investment in our mass transit, rail system and all of that, so that we move less on the road. I think these are some of the things that we need to do. Some of them can be done immediately, some of them short term, some of them medium term, some of them long term.
And then giving some perspective as we are wrapping up our conversation to short-term, medium and long-term projects that we can actually have feasible, just because we know the administration of President Muhammadu Buhari is drawing to a gradual close. We have barely 2 years till 2023, and then we need to set the agenda clearly. Now, what sort of shifts do you expect to see in the short to medium and long term for the fact that Nigeria largely remains a consumptive nation? We don't necessarily produce what we need. We don't necessarily produce what we eat. We don't necessarily produce what we can actually produce for the international market and a whole lot more. How and when do you see us making that gradual shift from heavily importing or heavily consuming to now gradually producing and then having more earnings, and then we can now bring down the cost of production from agric to oil and gas and a whole lot more?
Well, what we need to do is to create the environment for productive, sustainable and competitive production. That is what we need. Even as bad as things are, close to 80% of the food that we eat today are local foods. And those foods are also produced by these farmers, even though they have become very expensive. So it is a question of creating a much better environment for those in the agricultural sector in order to scale up their productivity. Of course, I've mentioned the issue of security. For people to even farm at all, whether it is small scale, whether it is subsistence, whether they are peasant farmers, whether they are large scale, there has to be security. So government needs to fix that so that a lot of people can go back to their farms. While that is happening, we need to address the issue of productivity in agriculture. Because productivity is very low because we are applying very little technology in agriculture. Many of the operators in the sector are still using hoes and cutlasses. So we need to create the incentive to scale up the use of technology in agriculture. We need to improve the yield per acre. We need to improve the quality of seeds, because some of these seedlings that they use, the yield are vary in terms of the quality. We need to use a lot more. We need to do a lot more mechanization of agriculture and move away gradually from these hoes and cutlasses. We need to create an environment for corporates, for real investors to go into farming. Farming should not just be for those who have nothing else to do than to go to the farm. It should be for those who are real investors, but we need to create the environment for them to get there. We need to see what we can do in terms of import duty, cost of financing, for all the critical inputs that we use in agriculture. I'm talking of tractors, machineries, harvesters, pesticides, and all of that. And when we talk about agriculture, it's not only crop farming. We have cash crops that can generate a lot of foreign exchange. We have livestock, we have poultry, you have animal husbandry, you have fishery. All of these areas, if there is engagement with the stakeholders, the government will have a very clear insight as to what exactly we can do to support them to scale up their productivity. Then we need to look at the issue of financing. The CBN has been doing a lot, anchor borrowers and all of that, but we need to review the model and the strategy to ensure that this CBN financing is getting to the right people. Because we have been getting all sorts of complaints about the thing ending up in the hands of people who are not really farmers. Then we need to address the issue of climate change. That may not be an immediate thing, but we have to do something incrementally. Because increasingly, many of the arable lands that we used to depend on, many of them are no longer arable because of the challenges of desertification, because of the challenges of flooding. These are climate change issues. We have heard stories about what has been happening to Lake Chad and all the farming communities and the economies around Lake Chad, just because of the drying up of Lake Chad. These are climate change issues. Then the CBN needs to normalize the foreign exchange market. The foreign exchange market can be a lot better than what it is. The volatility can reduce. The system can attract a lot more inflows if you really review and reform the foreign exchange market in order to bring some stability to it, to reduce the volatility, to increase the liquidity, and to attract a lot more supply into the foreign exchange market. That's a policy matter. If we tinker with the policy, you rejig the policy, we are likely to also see a much better foreign exchange environment, because that is affecting those who are in manufacturing, those who are in production, those who are in the service sector. Then we need to look at this one at our ports. Our port has become a major constraint to productivity. The port situation is contributing to cost. It's contributing to inflation because of all the challenges of cargo clearing, of the gridlock, of the extortion, and all of those things. So it's a multi-dimensional thing. So we need to deal with all these key dimensions if we are really serious about bringing down.
We definitely need to look at a multi-dimensional strategy that would ensure that we nip in the bud inflation. Thank you very much for your time on the show today, Dr. Muda Yusuf. It's been a pleasure speaking with you, and we hope government takes action now.
Thank you.